2022 is coming to a close. With a couple of months left in the year, here are some planning tips that can help minimize your individual tax liability. Now is the time to take advantage of year-end moves to cut your next year's tax liability before it's too late. Whether you make a charitable donation, fund your retirement account, or review helpful tax deductions, taking these small steps now can make a big difference come tax time. Here are 12 tax strategies that can make significant impact in your tax liability if implemented before year end. The market over the past 12 months has continued to be volatile and downright brutal. Take advantage of the down market by selling off lost positions and rebalancing your portfolio. Before selling off your portfolio, consider reviewing this strategy with your financial advisor. Also consider how your overall capital gains and losses will impact your other sources of income. Also consider if your replacement investment will work with your current wealth management strategy. Also consider wash sale loss rules to ensure your losses reported will be allowed. And finally, consider how harvesting capital losses will impact your dividend distributions, and also consider the transaction fees. If you hold shares in a taxable account, you're required to pay taxes on mutual fund distributions, whether the distributions are paid out in cash or reinvested in additional shares. Investors looking to rebalance their portfolios can find that mutual fund distributions can be problematic if purchased late in the year. If mutual funds are your investment of choice, look for funds that have a low turnover rate to avoid creating a taxable event. If the current market conditions make a Roth conversion more enticing, you may want to consider making the conversion in 2022. It's important that you understand the tax you'll need to pay on your investments in order to make the conversion possible. An incorrect W-4 can result in an unexpected refund or tax bill come April 15th. Review your pay stubs regularly to ensure proper withholdings are being deducted from your wages and benefits are being treated accurately. Bonuses are typically withheld at a flat rate of 22%, and non-qualified stock options are withheld at 25%. This is often lower than the taxpayer's normal withholding rate, generating a tax liability come tax time. The maximum 401k contribution for 2022 is $20,500. Consider maximizing your tax-advantaged retirement accounts to lower your taxable income. Most companies will match a certain percentage of your employee contributions. Employers consider this part of your compensation package, so make sure you're taking advantage of the employer match. Net investment income tax is an additional 3.8% tax that applies to investment income above a certain threshold. Net investment income does not apply to income derived in the ordinary course of trade or business, in which taxpayers materially participate. Similarly, gain on the disposition of a trade or business assets attributable to that activity in which the taxpayer materially participates is not subject to net investment tax. Each individual may transfer up to $16,000 per person per year to any number of beneficiaries, family or non-family, without paying gift tax or using any available exclusion amount of one's lifetime. If you're planning on making large gifts, consider splitting them between December and January to avoid having to file a gift tax return. The current applicable estate tax exclusion amount is $12,060,000. Taxes are imposed on transfer by gift or at death above the applicable exclusion amount. With proper planning, it is possible for a married couple to use two exclusion amounts. Consult with your legal advisor to determine if estate planning is right for you. A donor-advised fund is a charitable giving vehicle which can assist with bunching up charitable contributions into a given year. This can be useful when you are normally below the standard deduction threshold and want to make a large gift over a period of time. Consider funding a child or grandchild's education plan through a 529. The earnings accumulate tax-deferred and qualified distributions such as tuition, fees, supplies, books, and equipment may be tax-free. Plans can be funded up to the annual exclusion amounts, which is $16,000 for a single taxpayer and $32,000 for a married filing joint couple. The American Opportunity Tax Credit and Lifetime Learning Credit are available for students who attend qualified education institutions. If you or a dependent attended a qualified education institution like a university, in 2022, you'll receive a tuition statement, which is a 1098-T, and that will summarize your tuition payments for the tax year. A health savings account or an HSA are available to participants enrolled in high-deductible health insurance plans. HSA's contributions are not subject to federal income tax, and distributions are tax-free as long as they're used for qualified medical expenses. If you have an HSA plan, consider contributing to the maximum allowable amount before year end. Alright guys, I hope you found this video helpful. If you did, make sure to give it a big thumbs up and hit that subscribe button down below. We'll catch you in the next video. Take care.